Good evening, Rafi. How are you doing?
Pretty good. I had a good week last week, and was it Sunday now? Yeah, it's good. I'm good. How are you?
I'm doing well. Some Sunday evening where you're at, and about two. Well, not about. It's 2 in the afternoon where I'm at.
Where
If
are
you,
you?
I'm in Atlanta, Georgia,
Yeah, I know it. Okay.
and you're in Israel. What part of Israel? And I'll look on a map just to get an idea.
All the way up.
Oh,
Some people call it southern Syria, the Golan, whatever. Yeah, disputed territory. I don't know. It's in the Golan, above the Kinneret, above the lake.
got it. Now, just again, a little bit about your story. Were you ever in the States, or how long have you been in
Yeah.
Israel?
Yeah, I grew up in Miami. I lived in the States till I was 23. I went to college at Brandeis, Jew U, I guess they call it. I don't know what they call it now. Woke U. I don't know.
Right.
And then I moved to Israel when I lived for a year in New York, and I went to rabbinical school in New York for 1 year, and then I decided it wasn't for me, and I came here and got married, and then eventually I found libertarianism somewhere between 2008 and 2012 when I figured out Ron Paul was right about everything. And then I started reading about economics and solved a lot of problems and put things together for me. That's
Gotcha. So 2008, Ron Paul running for president, that's really what got you interested in economics, correct?
No, it was 2012. 2008, I figured out something was very wrong. I didn't know what it was. And then I started turning more libertarian. And there's like a libertarian activist in Israel. His name is Moshe Feiglin. He's kind of a loose cannon in Israeli politics. You probably wouldn't know who he is, but
I haven't heard of him.
he's like the Ron Paul of Israel. So he put me in the libertarian direction. And as I was a follower of his, and I was also his neighbor, I came across Ron Paul just one night. I didn't even know who he was until 2012, and then I just kind of like fell into a giant deep rabbit hole, and I was up for like 36 hours.
Got it. Well, tell me how that's interesting. How is it like being a libertarian, using your words, living in Israel? Is that, yeah, how does that work? What is Israel like? And how does that, yeah, mesh with government there and that sort of thing?
um, it's a complicated. I live in a very complicated situation, um, because okay, well, first of all, when you say what's Israel like, do you mean the people or do you mean the government? I mean,
No,
this is
not the people part. I would say, well, that could be the people, but I was more implying the government because and I'm
Mhm.
coming from a place of being naive. Um, Obviously,
Okay.
since you've been in the States, we're supposed to be the land of the free, that sort of thing. But
Yeah.
as throughout my life, I am pushing 30. I'm sorry, pushing 50 years old here,
Mhm.
and that has progressively gotten more bureaucratic and less freedom. So I mean, it's been more of a struggle nowadays than it was when I was a child or even a young adult. So my that was the context of my question. What does that look like now in Israel, or how does a libertarian like yourself?
Okay, so
Does that make sense?
I'm yeah, it's a I can come at this from many different angles, and I'm not actually exactly sure what you're looking for, but I'll just start talking, and if you like it, whatever. So I I'm a deeply Jewish person, not necessarily like religious in the Christian sense of what religion would look like,
Mhm.
but I'm very nationally connected to my people, and I do see the Bible and Judaism as really the founders of libertarianism, not in the strictest sense of like, this is libertarianism and this is, it's, I'm not saying they're equivalent, but the whole idea of, enslaving an entire people is an illegitimate thing and you can't just do that just because you're powerful. That came from us, that whole story. So I see our mission here, the Jewish people, as setting an example, which we're not doing very well. I'm not saying that we're succeeding at that, but that's why I'm here. I'm trying to be both Jewish and libertarian together, and show people that it can be done and that it should be done. But meanwhile, Israel keeps going in worse and worse directions. I mean, the government here is just, it's terrifying. It's very frightening. And it keeps getting worse. I mean, what I went through, what many of us went through in 2020 to 2022, it changed my life. And this gray in my this gray in my beard comes from there. As I got, thank God my family was very strong, but I fought back against tyranny in ways that I didn't think that I was capable of. I just kind of lost it. And I came to the conclusion I have to kick and scream, and I have to fight. So I did. And a lot of people thought that I was nuts, and maybe I am, but I did what I had to do. And I hope that the virulence of the way that I fought back helped stop some of the tyranny in its tracks. And I'm still involved in a bunch of lawsuits with that. That's neither here or there, but so yeah, I see my mission here in Israel, and I do see a general collapse of society, which I think is going to be a good thing. It's going to be rough, but when it does happen, I need to be here with my people, and other people need to be with their people, and we need to each rebuild our own cultures to what their ideal used to be, whether you're American or Jewish or somewhere in Europe, whatever was the best that your people could come up with. That's what you got to rebuild. We're all gonna have to do that. So I'm here, you're there, and we got to get to work.
Yeah, perfect. That sets up the context, I guess, for your view of the world and where you're at. I guess that was really a great answer to my question. But I guess the next thing is that I'm very curious about is how this relates to money, right? In exchange, if you would. And what I mean by that is you specifically have an interesting background, I guess, is because you lived in the States and now you live in Israel. So you're very familiar with the dollar, right? And so your point of view, and I am somewhat on the fence on this. I used to be very Austrian, and I am Austrian in my thinking, in my theory, in my foundation, but practically I'm on the fence. If you would, it's just this idea of dollarization and de-dollarization. I'm curious, working that out with you and your thoughts, in the context of, like, if the dollar goes away for international exchange, what else is there? Or what would you say to somebody like that? And then I'm not saying that's me either. I'm genuinely curious about this.
Right. So the way I look at it, this kind of fell into place only 2 or 3 years ago for me. The things just gradually fell into place, and some things fell into the wrong place and I had to move them. But this one fell into place, I think, in the right place. I was listening to Peter Schiff one time, maybe 2 or 3 years ago, and he said that he said something like a sentence like the dollar is a money substitute. And then I remember Mises saying that in his book, Theory of Money and Credit. I think he used the term money substitute, which that phrase, I hung on to that. And I was like, wait a second, that's what it is. That's what the dollar is. Not, it's not a money, right? It was born as a substitute for something else. Like there was something already being traded for stuff. And then the dollar came in and said, look, instead of using that stuff that you're using, just use this piece of paper instead, and it'll be the same thing, right? And then everyone's like, okay, sure. So that's how paper money came into existence. It cannot come into existence any other way. That it would be impossible, because any other monetary medium that comes in to replace something else has to base itself on that previous price array, or else prices make no sense and you have no division of labor at all. It always has to go back into the past. There's a chain, and it cannot be broken, right? It can be, you can have bumps in the road, like serious bumps in the road, but that can displace a lot of people and say like, well, a lot of this price system was wrong. So the prices of this stuff is going to go down. The prices of that other stuff is going to go up. And the people that were selling the price that goes down, they're all messed up now, right? And the people that are selling the stuff that the price goes up, they have a lot of money now, right? It's a wealth transfer because the price system is wrong. So that's kind of basically what happened in the Great Depression, right? There was a price system, a price array, and it was discovered that it was all wrong because the Fed had been putting all these other money substitutes into the system that disturbed all the prices of everything. And then when they no longer could do that, right, then they stopped, and then everything got messed up.
Right.
So then to try to go back to reality, the Fed, or was it Roosevelt, right? He changed the price of gold from $20.65, I think it was, or something like that, $21 to 35, to $35, right? And then everyone's like, you could look at that as in the current environment, so well, who cares what the price of gold is? Like what? So it's going to cost you like 60% more to buy a wedding ring? Who cares? Like what? Why is that even important? But if you understand what gold is, it is not just jewelry that you put on your finger when you get married. It's money. And when the exchange rate between money and a substitute is altered, the prices of everything gets altered. Which is why in every single hyperinflationary economy that has ever existed, it's gold that goes to infinity, right? So what is that? Why should gold go to infinity when that's happening? Well, because it means the money's dying, and the money is gold, and what you're using is just a substitute for it. So when you're saying that the dollar is going to leave in international finance, which it will, what's it going to be replaced with? It's not going to be replaced with anything. I mean, it's the substitute that's going away. So when the substitute goes away, you got to go back to the thing that's not the substitute, which is gold itself.
Mm-hmm.
So
right.
that's what happens.
So for what you're saying is gold's going to replace the dollar in essence, is what you're saying?
No, not even that. I'm not saying gold's going to replace the dollar. When you're using a dollar, you're using gold. You just don't realize it. So when the dollar goes away, it's not going to be replaced by the dollar, but replaced by gold. It's just not going to work anymore as a gold substitute. So instead of using a gold substitute that just doesn't work at all, you're gonna have to use gold itself because there's nothing else to use.
Got it. Now that's an interesting point, and I guess I'm trying to game this out. Would such a situation be highly inflationary, going back to the gold standard, or would it be? It seems like that would be very deflationary, and maybe even would that bring price stability then? In your view,
highly inflationary. That it can't. Going back to gold cannot. It can't logically be inflationary. It's not even deflationary. I think what you're talking about is will prices go up or down? In terms of like when you have a hyperinflationary event going on, what is happening is that the prices of everything is going way, way, way down in terms of real money, right? It seems that the price of everything is going up in terms of dollars or Weimar yen or whatever. Weimar, not yen. What was the marks? Sorry. It seems like the price of everything is going way, way up, but really, if you look at real money, the real money is going crazy, and the price of everything is going way, way down in terms of real money. And what is that signaling? That's signaling the economy is begging, it's desperate for liquidity, for real liquidity, because otherwise the division of labor is going to break down, and people are not going to be able to trade anymore. And then you have a zombie apocalypse. So the prices of everything going down in gold, right, and silver is a signal that the most important thing right now is gold and silver, more important than food, water, or anything, because people can still drink water and get food somewhere, right? Or they can barter other things for it. But in terms of the entirety of the division of labor itself, you need a money or it will break down. So it's much, much more important to get gold and silver in that economy as soon as possible. And so is that inflationary? The way I see it in an Austrian perspective, inflation just means like, okay, we have money, gold and silver, we have their substitutes, these paper things or digital things or whatever substitutes they are. And inflation is when you say you increase the supply of the substitute, but you do not increase the supply of the actual thing. So you're lying, right? And that's what inflation is. It has effects, meaning it disturbs the price array because it makes the economy think there's more gold or real money in the economy than there is. So returning to gold would be the ultimate. Wouldn't be deflationary. Like I don't see gold as deflationary. It's just money that isn't inflated, right? There's money substitutes that are inflated. You can't inflate money itself. It's gold. You can't inflate that.
No, I'll accept that definition. I just have to think about it. And I guess to share with my point of view, I'm not trying to straddle the fence, but I am solidly in your camp from an ethics point of view. I am solidly in Austrian for many years, for decades, if you would. From even a practical point of view, I would say. But I was having this discussion with a friend of mine over the last few weeks, and these questions came up of that I just posed to you, and I thought there was, and I still think there's something to it. It's like, if not the dollar, what are they going to replace the dollar with then if the dollar goes away? And I think that's an interesting question. And maybe it is replaced, and then I would be the first in line to have that. Don't get me wrong, but it's just something that I'm trying to work out, if you would, and that's also where you came to top of mind as somebody I needed to talk to.
Yeah, well, it's not something that needs to. I don't think it's going to have to be worked out. Like, I think in your head you're picturing, okay, so one day the dollar hyperinflates to nothing, and then people will be like, well, what do we do now? And then you have like a committee that gets together and decides it's going to be XYZ. There's not going to be any committees,
right?
It's not like the gold standard itself was not, the League of Nations getting together and deciding, okay, we're going to use gold now because it's most, it's just what people were using. And then if you wanted to be part of that global division of labor, you would have to use gold because other people were using it. Because really, that's what money is. Like, if you want, I don't know if this analogy works, but if you want to have babies, you need a boy and a girl. Okay, that's how it works. You can't do it any other way.
Right.
So if you want money, in a global economy, you need the most liquid commodity that exists, and that is gold. Arguably, yes, true. In prisons, you could have maybe tins of mackerel or something.
I wouldn't even go there, but I totally get your point. Yeah, absolutely.
Yeah.
So fast forward to more, I guess, what's happening now, meaning June 2023. We're getting these signals that we're hearing, or we've heard in the past 12 to 18 months, all about inflation. And I am actually, granted, I took my youngest son to the store, to Whole Foods here in Atlanta, and we bought lunch, and I paid $50 for lunch for two people. So that's obviously very inflationary than it was, than I can remember. But what I'm asking is like, it seems like there's a lot of deflation going on right now. Yeah, tell me about that. What exactly are we seeing, and what's going on right now in the economy?
Well, right now, if you're talking about the money supply, it's deflating. The money supply hit a peak of like 11.5 trillion something in April 2022, and now we're down to like 10.6, 10.5 trillion. So about $1 trillion have been erased out of existence in about a year. And the reason that is happening is that just the mechanical reason that's happening is that the Fed on its balance sheet is we hear this term, the Fed's balance sheet. What does that mean? What the Fed's balance sheet? Well, the Federal Reserve, which is the issuing bank of dollar units, they issue those dollars for stuff. Now, what stuff do they have? Well, they have some gold, and they have a bunch of debt from the government and debt from mortgage owners. Right? And then ultimately, they own these mortgage-backed securities, they own these treasuries. So all of this, ultimately that all gets paid back to the Federal Reserve. And when money is paid back to the Federal Reserve because they own a lot of the debt, then those dollars that they are paid no longer exist, right? The Fed is the black hole from which all, monetary matter comes, and all monetary matter gets sucked back into it. So if the Fed continues to allow the debt to be paid off that it owns, then more and more dollars will just come out of existence, and you'll have more deflation. But still, I mean, compared to how much money was in the system, how much dollars was in the system in, let's say, 2019, we're still way above that. There's still plenty of extra dollars left over, and that's why consumer prices are still going up, and they will keep going up. I don't see them going down. In the late stages, that's what happens. Like, consumer prices just keep going up and up and up as you have more and more intense financial crises. And then eventually, in order to stop the financial crisis, the central bank has to keep printing more and more and more, or everything will collapse. Because everything, the entire price array, the entire lie that the United States, and really the entire globe, because everything's based on the United States monetarily, the whole lie that's been building up since 1933, when Roosevelt stole all the gold, that's been building up for like 80, 90 years. And that's all going to collapse either way. It's going to collapse either through hyperinflation, where the dollar unit doesn't have any definition anymore at all, or it happens through hyperdeflation, where the Fed just sticks to it. This is not going to happen. But if the Fed really sticks to its guns and says, no, we're never going to print again, then eventually all of the debt that it owes on its balance sheet will be paid back to itself, and then you'll have no dollars left. And then this is just theoretically, just to understand the process here. And then all you have left is the gold left on its balance sheet, which cannot be destroyed. And then you have gold at a dollar, and gold at 100% reserve ratio again. And then you're back to like $35 an ounce.
Right. You're back to where you started. So where exactly in your mind, where are we at now? The Fed's been very aggressive, talking and in actuality taking money out of the system. But with all of the banking, which everybody's been talking about, so we don't really need to talk about it. But the banking crisis going on that has not been solved, asset prices coming down, real estate prices coming down. Here in the US, I can't speak for anywhere else in the world. Where exactly, in your mind, where is the Fed at? I mean, are we close to a pivot? All of that, work that out for me.
I wish I knew the exact answer to this question, because then I would be a lot more calm. But just to make a more global point, look, every day the world seems to get crazier and crazier. People are making less and less sense. And I really it's clear to me that a society, and we are in a global society, a society the sanity of what people are living for and how they're behaving, I think it can be proportionally measured against the dilution of its money. Like, the more inflated its money gets, the more insane people tend to be.
Yes, well said.
So I think that's very clear. So for the sake of sanity, and I don't want any more people getting hurt and children getting hurt and having all these, surgeries. I'm not going to say, you know what I'm talking about.
Yeah.
It's just horrifying what the hell is going on. So yeah, I really hope for the children's sake that this is almost over, because the minute that this is done, they will be much safer from all the lunatics that are out there doing whatever the hell they're doing.
Right.
So we're a more economics answer to that question. I don't know. I build like these scenarios in my head, given what we have now, and I try to fit things together. Look, we saw the banking crisis, the regional banking crisis, and on the Fed's balance sheet, there is I'm working on this on the Endgame Investor. I'm trying to triangulate exactly where we are in this curve that goes like this, and then up and up and up, and what's the angle of it, what's the equation of it. I'm not equation, but I'm Austrian. I don't work with equations in economics. Okay. So I'm looking for a heuristic here. And the way I see it, for now is that housing prices are falling year over year for the first time since 2012, but really it's for the first time seriously since 2008. I think 2012 was just like things stabilizing, and but really in 2008 they were really crashing. The difference between now and 2008 monetarily, just speaking from the Fed's perspective as the issuer of the dollar, is that in 2008 the Fed didn't own any housing bonds. They didn't own any mortgage-backed securities, right? So the housing market and the dollar were not connected, not directly at least. So housing could fall and the dollar could strengthen as all that dollar debt, that mortgage-backed security debt defaulted, but it wasn't on the Fed's balance sheet. So you had private debt defaulting, right? And the money supply shrinking from a private perspective. Now that the Fed owns like not all of the mortgage-backed securities, but they own like a fair amount of it. It doesn't matter how much they own, but the balance sheet of the Fed, I think mortgage-backed securities make up about 30%. So if these bonds start really defaulting, the bonds that the Fed owns, that means like 30% of the dollar's backing just disappears. And then that has to be taken up by something else on the balance sheet, right? What's left is there's treasuries and there's gold.
Right.
So could be that both of them go up, but eventually even the treasuries are going to default. So I think this starts with another housing crash, and then the Fed's going to have to print more and more. I think they're going to have to reach like 10 to 12 trillion on the next round, and I think they're at 8 trillion now. And it's at that point.
I just can't even imagine that. Those numbers are so big. Not to interrupt you, but
I mean, they're all the same. Like, what's the difference between 8 trillion and 12 trillion? It's just 4 more trillion. Like, this is all nothing anyway. They're all just units of nothingness. So,
you made an interesting question, I guess. Thank you for your answer. But you made an interesting question, but point. That's really I thought in a recent interview or presentation that you did, specifically about the metals and more specifically about silver. I think that some people can use, and people can use all of this, but specifically shorter term, you were talking about how the open interest in silver as it grows, the price. Well, tell me about the correlation between the price and of silver and the open interest in the futures market. Talk to me about that. Where are we at?
It's not just silver. It tends to be that when open interest means the amount of contracts that exist. Right. That there's a long on one side, there's a short on the other side. They're always equal because you have to be long against somebody else.
Trader, just so you know. But yes, go ahead.
So the higher the open interest, that tends to correlate with highs in the gold and silver price and really any commodity. And as the price falls, you have the shorts buying back their contracts and closing out, and then you have open interest falling. Right. So I'm really following gold in this, less silver. And
well, tell me about gold.
So the low in open interest in gold, the recent low is like at 420,000 contracts. I think we're at like 434,000, and that could close at 420,000, in a day. That you could close that many contracts in a day. So I'm not like super into this stuff in terms of technical and like I'm not going to say like at 420,000 go all in, it's fine, we're at the bottom. I'm not like that. I'm not that religious on technical signals like this, but it is something to monitor as a sign for a potential being very close to a bottom. So I think we're going to get around 420,000 contracts just because since 2020, open interest has been subsiding and trending downwards. And I think that trend is going to continue as the physical markets get more important and the paper markets get less important.
Yeah, it's interesting. It's something that I used to pay attention to years ago when I was really active trading, and I hadn't in a while, and I saw that you mentioned it. And so I thought that was a really good point of interest. How about, I guess my next question would be in just practicality, structuring a portfolio. Not that this is advice at all, but if like, so for example, if we see a sell-off, in equities in general or assets in general, what is your view on how gold and silver would respond? And I say that because I'm assuming they would sell off as well, but my point of reference is 2008, 2007. I was really active, and I'm active now, but I was actively managing a lot of money during that time. And everything sold off because there was a huge liquidity crunch. I guess I'm curious what your point of view is now, what that would look like. And I don't really have an opinion, but I'm interested in yours.
Hold on, I'm pulling up a chart here. Maybe I'll try to share it to show something that that might shock people a little bit. So give me 1 second here. Let's go back to 2006 on this chart. Okay. So here, can I share my screen?
Let me see if I can.
Yeah,
I would
yeah.
like, can you?
So host disabled participant share screen sharing. So if you can enable that.
Let me see if I can do that for you.
Okay.
I don't know if I can. If I can't, my apologies.
All right. Well, if not, it's fine. I'll just look at it and describe it.
Yeah, if you could just describe it to us, and I apologize.
Okay.
I will disable that next time around, so we're not on the fly. But go ahead.
Okay. So if you look at, in 2008, right, it looked like gold was really collapsing, right?
Yeah.
But if you measure gold versus commodities versus any other, like a basket of other commodities, I'm looking at the gold versus the GNX commodity index, and that's a production weighted commodity index. So if you look at that, gold hit a low in terms of other commodities, mostly oil, in June 2008. That was when oil was like $150 a barrel.
Yeah.
Right. So that it hit a low here of like 1.04. And then that's in May. That's in May 2008. And then from May 2008 to March 2009, that March 2009 was like the full deflationary, that was it. Like the financial crisis was, the acute phase of it was over. And everything had deflated, and gold had gone from like 1,040 something to like 680 something, whatever, and it was like a scary drop. So if you look at the gold chart versus other commodities at that time, it jumps from like 1 to 3.5. Okay, so it more than triples in terms of other commodities. So like, did gold go up or did it go down? Like, okay, so it went down in it went down in dollar terms, but it really skyrocketed as everything else was deflating so much faster.
Right.
So really, like in a deflationary time when dollars are coming out of existence and all assets are deflating, the purchasing power of gold versus anything is going to rise, even if the dollar price of it falls. Okay, that's what's going to happen. Same thing happened in 2020. We had December 16th, 2009. Look at the chart here, and we're at 3.4 versus this commodity basket. And then that's December 2019, and then April 2020, all the lockdowns are like, everyone's freaking out, and then we're at an all-time high of 7.3. So that's a move of that's a doubling in just 6 months.
Yeah,
right?
just really quick.
And that was when gold fell from in what was that crazy 2 to 3 week deflationary plunge that was like from 1,800 to 1,450 or something scary, like similar to the 2008 scenario. But what's really going on is that everything is deflating and gold is falling the least.
Yeah,
that's what's happening.
Yeah.
So it's not good buying gold. It's not about investing, and it's not. There's some people use gold to increase their dollar holdings because they want more dollars. right? Those are gold traders and stuff. I don't use gold to increase dollars. I mean, I like more dollars. I'm not gonna complain if I have more dollars.
Right.
But
I
what I'm playing for is I use dollars to increase my gold supply, right? That's what I do, because I know that in the end, this is all coming down. And when it does, I want the maximum purchasing power, because that's what I want for society. I want the people with the gold that are smart enough to understand this is all an illusion. I want them to have as much purchasing power as possible, so that they have all the power to reorganize what they can in their respective societies, and bring people back to sanity. And they need money for that. And that's what I want them to do.
I'm with you on that. I'm with you 100% on all of that. As we wrap up here, what's one piece of advice you would give to somebody? And it can be anything. It can be own more gold if you want, or it could be, go knock on your neighbor's door and say hello. But whatever it is, what's one piece of advice you would give our listeners out there in the context of the times that we're living
in? Get local. Get local. Find out who's around you. Find out who's good at growing food. Find out who's got the skills. Find out who can fix your whatever you need. Think about what you would need in a world where you can't just buy something from Amazon and have it shipped from China. It's not going to work anymore. Or if the supermarkets aren't, they're empty because the dollar is dead. So what do? Like, make friends with farmers, make friends with carpenters, make friends with your neighbors. Try to find people who also understand this is all going down, and start a local economy, a local community of people who trust each other and have similar values. And if you're in a city in a high-rise building, get the hell out of there now. I don't have much time left. Get out.
All right, excellent. Well, how can somebody reach out to you? I reached out to everybody listening. I reached out to you on Twitter, and you're responsive same day, if not in a few hours. But how would you recommend people reach out to you?
So you can Google the Endgame Investor. That's what?
Which I have done.
Oh, okay. Yeah. So I write there 3 to 4 times a week with a weekend report. And you can find me on Patreon, where I give a more biblical perspective on these issues, because that's what gives me chizuk, gives me strength to keep going. I know God's behind all this, and if I didn't believe that, I don't think I'd be able to wake up tomorrow. And you can find me on Twitter. You can message me if you want, and you can find me on YouTube. I'm sorry, I don't like YouTube either, but that's where it is. And I do a video maybe once or twice a week, sometimes an interview like this. And yeah, so that's where you can find me.
Well, to all those listening, again, I found Rafi. I've been a listener and interested party listening for the last few months. And Rafi was very kind and gracious to respond to me. So if you do reach out to him, I'm sure he'll respond to you. All right, thanks, Rafi.
Yeah, just don't sound like a Chinese. Don't sound like a Chinese bot, and I'll get to your message.
That's right. All right.
Yeah.
Thank you so much. If you want to hang out after I stop recording this, so there we go.
Yeah.